CTM. What's going on, everyone? I hope you are well and doing great on this Wednesday as we get ready to continue doing what we do best, putting the work in. I tweeted out earlier today that there is a time to play offense. There's a time to play defense. That championships are won with great defenses. That when you know when to throw on the offense, you could be untouchable. Right now is not a time to play offense. Right now is a time to play defense. If you remember where we first looked out for any type of caution, we were following, right? Let me just jump over here and I got a few things up, and I want to point out the real yields, U.S. Treasuries, and it was over here on April the 11th as everyone was really starting to get overly emotionally bullish. New all-time highs coming in 2023. This is what happened 4 years ago. So that means that we're coming into 40K over the next week and all that type of hype and stuff like that. We just threw out, look, one of these is likely wrong. The last time it was Bitcoin, sure enough, that was the onset of the correction that we're currently into. This correction today is on the verge of actually breaking down further. We've been watching this bearish structure develop. Look over here. This is April 11th. Bitcoin just above $30,000. And we just threw out a line of caution. All right. Could you, Hypernova, let me catch up with you. Let me make sure that we go slow today and make sure we cover everything. We got a lot to actually talk about today. There is potentially new trades entering the market. We want to make sure that we take our time and get this right. Can we go over how to get the daily chart for the liquidity? I can't see if Hypernova, if you go into the macro channel right now on the Discord, you'll be able to find that chart. If not, just go into the macro channel now and just ping me. And then after this stream, I'll share that chart so that you have that chart as well. And just be specific about which one you're looking at, whether or not you're looking for this one with the US tips over the real yields, or if you're looking for this chart over here where we show the liquidity. And by the way, I'm glad you're on point of that. We're almost to a trend line break. So we should look at what that means, because I maybe erroneously tweeted last week that when this trend line breaks on Ethereum, Bitcoin, that would likely mean that we are entering into an alt season. And I can't imagine that's happening right now. So that's a good one. We'll come back to that comment. Let me go ahead, Michelle, and favor this one. And towards the end of the stream, we'll make sure that we look at Ethereum, Bitcoin. By the way, the balance sheet continues to go this way. There were a lot of tweets after the U.S. banking crisis when the balance sheet was going this way, and everyone pointing out that, well, if this is going this way, then risk assets are going to go that way. And then we just pointed out before it started going down that, you know what, quantitative tightening is still going to be running. Expectations or balance sheet will go this way. The day before the U.S. banking crisis, it was Thursday or Wednesday, CTM live stream, and we talked about likely when things break, it will look a lot different than what people expect, pointing to what happened in September 2019 when we saw the reverse repo overnight rate break, and then we saw the balance sheet expansion. Equities melted up. Equities literally melted upwards. But this was a difference, is that this was a continuous QE. This was continuous balance sheet expansion, where this was a one-off event. Now, we could have more of these one-off events going forward. We're looking right now at interest rates, 10-year, inching up. We're looking at rate hike expectations live for June 14th meeting. Now, if they don't come to any type of resolution on the debt ceiling, I imagine that the Federal Reserve is not going to raise rates at the June meeting. Now, Janet is telling us that she's not even preparing for a default. This is today. Janet Yellen today is sincerely saying that, well, the Biden administration is not preparing for a default. We're just focused on getting a deal done. The clock is ticking. They're running out of time. Now, I don't believe that June 1st is the deadline. I don't believe that they're negotiating in good faith. And when that deadline is, though, well, I have no idea. I wish that the U.S. government, though, did put in contingency plans. It's not as if they have not dropped the ball before, and you never know. These things are kind of important. I would think that is pretty important to have into place. We've been looking at this potential bearish pattern developing. How rude of me. My little girls are like, how rude. I didn't even introduce myself. By the way, this is Jordan with Conquering the Markets. This is CTM right over here, the best community I know of. I am honored to be here with all of you all the time. If you are new to the channel, welcome. And if you're not, welcome back. If you enjoy the content, I do ask that please you do hit the thumbs up. It really does help the channel. And if you're not yet subscribed, go ahead and do that and hit the bell icon. All right. Keith, and then if they make it to June 15th, I do believe at that point in time, they also have the benefit of receiving quarterly taxes from corporations, which should give them even a little bit more time. So we'll find out soon about what's going to happen over there and whether or not I imagine, regardless of what the real deal is, as far as when the U.S. Treasury would run out of money to be able to pay off all its obligations, I think that the market would panic first, right? Like the market probably, whether it's true or not, is looking at June 1st and coming into this weekend. If they've not been able to make significant progress where they're at least passing some type of short-term funding solution, at that point in time, we could see really the market panic. And we'll look at the NASDAQ and the S&P from a technical lens as well. Great to see you in here, my friends and everyone in here, for sure. That works both ways, right, AJ? Thanks for keeping us on the right side. Before CTM, I'd be trying to catch falling knives. And that worked on the upside as well, though. I mean, there were a lot of people who honestly came in a lot of, very late into the 2023 up move. And we were there right on time and on the right side. And then, we did become cautious. We didn't become bearish. We just became cautious. And it's just so far a small little pullback. So it's a pullback for ants as far as Bitcoin's concerned. But sometimes these pullbacks turn into corrections. And then sometimes those corrections turn into macro trend changes. And why everyone right now is overly bullish, and I say right now why they're overly bullish, is because the macro doesn't warrant it. And there's lots of things to be concerned about. And one of those things is liquidity. And on the way up, you saw a lot of perma bulls pointing out like, oh, liquidity's headed this way. And that's good for risk assets. Bitcoin, new all-time highs in 2023. But as the liquidity started to turn, and we were there too, we were showing the liquidity and it's rising. But then as it started to turn, we also talked about the turn that was taking place, and you just want to follow it both ways and stay on the right side. Let's look at a little bit of TA here on Bitcoin and continue, because right now we are getting close to seeing this bearish structure complete. If the low is taken out, at that point, we've taken out, we're resuming down. Let me go ahead and just take this line over here. The bold line, right? The prime line, this is all just copies of it. It's the same angle. And I'm just bringing it down this morning to where that touches, and kind of neat, right? You could see that the low from last week, this is where we bottomed out till today. And that's like, the on the verge of a breakdown. And if this gives way, and specifically if we close here today below her, then this bearish pattern is complete. It's a bearish structure. And that does not mean it's over. Now, at any point in time, we always look at both sides, right? At any point in time, this trend line that I'm highlighting up here breaks to the upside. that's a buy impulse kicking into the market, and that then puts this bearish structure invalidated. So that would be the first opportunity that we are seeing some type of continuation of the uptrend is in place. And there's an uptrend in place, right? We're up 100% off of the low in just a few months. Now, we're looking at, there's that same trend line you were just looking at, that prime line, and I'm highlighting it here now for you on this chart. And I'm going to continue adding in a couple of more things because here's that upper trend line as well. And we're waiting for a buy impulse to see some type of potential resumption out of here. And hopefully we're able to resume past that high and target somewhere around 33, 34,000 and as our next leg up. And then we run into some resistance there. And if we're able to break that, then I'm going to be starting to get excited because then we'll be looking at some nice upside price action. But we have to look at both sides. So let me add a few more things in over here. And I'm just going to add in that trend line over here. That trend line was the stop loss. Throughout this correction, we've taken 2 discretionary trades. The first one was a break on 27,500 on this trend line that you could see right here. And then that was exited very quickly once this trend line was lost, right? So that was a quick trade and a loss. And then we were back neutral and we were waiting for a breakout and a resumption upwards. And then the second thing that happened was that, and this was a tough one because I would have liked to have been taking remember I pointed out the pendant. I would have liked to have been able to take the trade up here, but the entry was all the way down over here. The entry was down over here, and well, hold on. Let me back. I take that back. The entry is down over here, right where I'm pointing. I'm gonna make that very clear to you right now. Let me go ahead and add this line in, and then we just added that little line in to show the first potential chance of any type of up move, but that was quickly rejected by our stop on this trade. And then it's going to add in this line, this channel, because it's very important right now. Because today is the first day that we have the potential to close on a daily time frame below it. You can see that this was the trade. The second discretionary trade entry occurred on the breakdown over here around 26,700. And price quickly followed through and wicked down. That wick down, by the way, that helped us form what is also this bull flag that is forming. You can see this is the lower end of support. We're going to go ahead and extend that forward because that's going to give us some type of, if we do break down, some type of potential moves that we might move into. We're places that we want to look for this bearish formation that's developing for it to come to a conclusion, and places that the bulls would have to defend. We'll be watching that. Funny enough, those places are probably where CTM 2.0 would be going on the offensive. Right now, CTM 2.0 has just kept us protected, keeping us out of the markets and on the sidelines. So this was the second discretionary short trade. We knew that this is all very counter trend. We're just trying to continue to develop our overall skills in the market. That comes from an analytic standpoint. That comes from a macro standpoint. That comes from a technical analysis standpoint. And that includes not only entering trades off of TA, but managing them, which is even more important. And upon that entry, right, we knew that the stop loss was above this red line over here. And that was up here at that particular point. And you could be bringing that down this whole way above that red line. And then if we're closing today below this channel, right? This channel, we saw that we went from this pendant that was developing, right? And then we picked up very quickly as soon as this channel was developing. And this channel price wicked down below, but then quickly regained it. And you could see this channel support holding on a daily time phrase, potentially up until today. Up until today, it's in jeopardy of price closing below it. If price closes below it, that's actually a breakdown of this channel, we'll call it. Some people might want to, let's call it a channel. And at that particular point in time, this is our last line of hope, breaking below that, closing below that. That actually probably looks for some further downside. Let's look at that downside and what that would look like. Let's look at it over here on a log chart. And just zooming out over here. And by the way, you can see where CTM 2.0 has kept us protected and out of the market. And that's on a daily time frame. Let me get off the daily and come to the 8 hour, right? And you can see that it's going on now out of the market here for, this is like 16, 17 days now that we've just been on the sideline. And that's an absolute position of power going on here, 18 days. So almost 3 weeks, CTM just out of the market. And that's that, knowing when to be in the market and when out of the market and on what side. That is everything. Here we go. Let's look at some downside potential that we're looking at if we see this bearish formation breakdown. A lot of people continue to look at this as very bullish, and they see that we are so far coming up. And that's true, and I respect that, and I see it. So that's why we continue to watch that buy impulse line, right? Breaking out below, above it is a good thing. Not only that, we could say that, well, this line that I have highlighted over here, this 25,400, that's a very important line in the market. And if we're able to hold above it, right, we're coming in for a retest now of that breakout. And if we're holding above it and able to resume off of over here, that's very bullish. Remember the upside I was talking about to you, 34,000, 33,000. It's in this area over here, and that would be where we're looking to target. And if we break out above here, then we have further upside. But even though that could be bullish, we don't know that that's going to be bullish because, again, we're not talking about this bearish structure with a certainty ending here. Now, bulls, if they defend this area over here, that's quite bullish. The only qualm that I have is that this is where people were exceptionally bullish. This is where we pointed out, something's not right. Be careful. I've pointed out whether or not this is a bearish structure that's forming here, or this is even some type of what does look to me like a Wyckoff distribution pattern. You could see the higher high and then the third higher high, right? And then the lower high. And then you could see the trend line breaking down. And it does look to me that, you know, whatever you want to call it, let's just call it not looking good, and likely there could be some further downside here. Now, it's true. We could see something invalidate this very quickly. We could see some type of resolution on the debt ceiling, and maybe risk jumps on that. You know, maybe erases all of its current drawdown losses, and I think that would be short-lived. I think that would be short-lived because well ahead of time, I pointed out that once the second half of 2000, remember starting in like January, I was talking about right now, people are turning bullish for good reason. My concern is the second half of the year. Right now, the Treasury is counteracting all of the Federal Reserve's quantitative tightening. But the reverse is going to happen after the debt ceiling it comes to a conclusion. You all are well aware of that now because everyone is talking about that because it's just what it is. And you can't just follow the charts. You have to be aware of the macro as well. Anyway, downside targets, let's look at them and see what could potentially happen, because if we do continue to break down over here, at that point, it's going to be up to not for the bears, but for the bulls to prove themselves. And we have this area over here, this 25,400, which is nothing more than 18% pullback on Bitcoin, which is nothing at all. If that were to hold, that would be very, very bullish indeed. Now, below that, we have this trend line. This trend line you can see is off the 2023, the low over here, and then the U.S. banking crisis. And in that area horizontally as well, right around 24,000, you could see this area. I'll highlight it right over here, right? You could see that basically from 25,400 through this area of 24,000, there's a pocket of supply, and we would like to see that hold. That would be nothing more than, 22% pullback. That would be very healthy. If that were not to hold, at that point, it's going to be up to the bulls to defend. A lot of people talk about, and potentially rightfully so. Again, I might have made a mistake. A couple of weeks ago, I said that we have not yet entered the accumulation phase, that there's plenty of time. Well, this might have actually, if you line up the Bitcoin price off of the halving, this is 4 years ago where we started seeing the accumulation phase begin. And potentially, that's all that's happening. And then we're looking in an area of maybe somewhere around 22,000, right where I'm highlighting over here. You can see that horizontal support, and you can see that this line over here, that would be supportive of it. This is the bull market breakout, this green line over here. If that line were to hold, and that would be the bottom area sloping upwards of the accumulation phase, this is all an extremely healthy market setting up some potentially significant upside into 2024. And there's a chance that the macro would support that. If the Fed is able to engineer a soft landing or even a mild recession, there's a strong chance that that would be very supportive. And not only that, anyway, I back up there, and I just want to keep going with the TA. We're going to move into a little bit of the macro in 1 second. I do regress over here. I want to point out that into that area, a lot of people think 22,000 is as far as the price of Bitcoin would move to the downside. I think that bulls over here, a lot of people, a lot of them, there would be a lot of fear from let's say, beginner retail. You would see a lot of emotion coming in from the perma bears who that whole way up, which is just offsides, stayed bearish on the market. They'd be like, see, I'm right the whole time. And that would be a battle. That would be an important test for the bulls to go ahead and hold. If we were to lose that line, and that's 30%, again, quite a healthy pullback in Bitcoin. Beyond that, though, at that point, that sets up two things, and that would be concerning. That would be a major sell impulse. That would be the loss of the bull market breakout. When I pointed out the underbelly breakouts, and they have never failed before, that would be the failure of an underbelly breakout. If I zoom out a little bit, and you can see this descending wedge in the market. Let me come to the daily time. The daily time frame. You can see this descending wedge, and it's beautiful because we've broken out to the upside of it. But if that breaks down at that point in time, this becomes the previous cycle ceiling, which was where we called the bull market breakout off of. That at that point comes into play. That at that point is no longer even a bull market. If that were to fold, well, then we're far from that now, but we'll look at it and revisit it if it does happen. I'm hoping right now that we see some type of resumption out of here and go to the upside. But obviously, I'm prepared for a lot worse than that to happen. Let's keep going over here. It's not all bad news. This is M2 money supply, and the data was released yesterday. It's down 4.63 since last year, the fastest pace of money supply destruction since 1933. Now, a lot of people, and you heard it a lot from a lot of people that, going back into 2021, and that 40% of all dollars ever in existence were created in the last 2 years. I mean, you heard that over and over and over again. How many times have you heard in the past, 15 months that 40% of all dollars ever in existence have been destructed? A lot of people are always very biased in their analysis and what they take in. That doesn't serve us well. We talked about defense and offense. What's happening right now is that we are currently in the midst of a tightening cycle. And if we see any type of tightening credit conditions, it could lead to blow-offs. Those are usually deflationary events. A lot of people are very adamant that in Bitcoin, the low is in. We're not going to. I don't know those things, but I do know now is not the time to be overly aggressive. now is not the time to be playing offense. Now is the time actually to be playing defense. You've seen it throughout CTM 2.0, the last 18 days out of the market on the sidelines, protecting yourself. This is the time that if you're able to persevere, make sure you do not have any third-party risk. Obviously, that was a horrendous lesson learned across the board throughout 2022. Right now, you want to remain safe and solvent. Even as far as the accounts that you're trading, I know we've seen some wild things in like FNGU this year. I know that we've seen some good things out of Bitcoin, some pleasing things out of Ethereum, and not such good things yet out of Cardano. At the same time, right now, you're looking to do, we want to get it done. For us, getting it done, right? That's like 70% a year. That's more than getting it done. That's among the best of the best. There's no question about that. But right now, you're looking to stay level, to preserve that purchasing power, to stay on the right side. And you never know what side that's going to be. So you want to be prepared for the upside. You also want to be prepared for the downside. But more importantly, throughout all this destruction that's taking place, you want to remain solvent and in position of power, because the result of this is going to be, instead of debasement, it's going to be further debasement. Debasement is the name of the game. Bitcoin, for me, the greatest thesis of it, and that's assuming adoption continues, is a hedge against the debasement of the currency. Right now, the currency is not being debased. The opposite is happening. You want to stay strong, and in some particular cases, that's even just level, so that when the next wave comes in, you're able to go ahead and ride it. A lot of people at the end of this wave, right where it's time to actually start playing offense and getting aggressive, they're going to be insolvent. They're not going to be here. When we talk about who's still here, it's who's here, who's solvent. Because those that are able to make it through and into the next portion of the Fed cycle, because right now we're going in a tightening cycle. After that, we're going to be going into full on debasement, and that's where you want to go ahead and be riding that wave. We've looked at it from both sides. This is the global liquidity, and you're seeing that over here in blue. And as it was rising, we were talking about it rising. And then as it was coming off, we've also talked about it coming off. You got to play this from both sides. This is Justin's view over here, not from one side at all. This is Goldman Sachs financial conditions, and they are currently tightening. We are seeing an alligator jaw going this way and this way, right? Between the NASDAQ melt up and tightening conditions, likely one of those is wrong. It's not all bad news, by the way. This is tweeted out today by CZ of Binance. He's saying that China Central Television just broadcasted crypto. It's a big deal. The Chinese-speaking communities are buzzing. Historically, coverages like this lead to bull runs. Now, I don't think that Binance is probably doing so well right now because it's a bear market, right? You see trading volumes go up during bull markets. So whether or not CZ is actually onto signal here, or he's just trying to create a buzz, the communities are buzzing, right? That is for you to discern. I don't have the answer to that or no. Nevertheless, it is nice to see China do an about face from the banning of crypto to now here on State TV actually showing. I'm going to get over to it. He said crypto, but they are talking Bitcoin. I don't understand actually the Mandarin, but nevertheless, it's not all bad news, doom and gloom right now. There is good news. Now, the bad portion of that is that China is currently seeing a resurgence in their COVID situation. We are not seeing really positive developments of their reopening, and now that's going from something that was fluttering out to potentially further setbacks. That could be inflationary. The Fed, don't forget, they are still not done with their current tightening. This is, by the way, you all know that we've had CTM 2.0 on grayscale. and I just was not happy at all with Grayscale. And starting in 2023, I said I wouldn't touch them at all. And looking at the same solution on ProShares, by the way, that offers the inverse as well, whereas Grayscale did not. You could see that thus far in 2023, it is tracking basically the same performance, even as drawdown and return. So that offers a potential solution for those that are looking for an ETF to invest in, as well as we have others, right? But this is just something I just wanted to update with you that I continue tracking in real time because we don't have the data to go back on ProShares and specifically on the inverse as we did on Grayscale. So just using the same exact solution and watching how that continues going forward. A lot of people were frowning at the exit, right? We saw FNGU take an entry and then a quick exit over here, smashing in that, what was it, like a 1.2% loss over here. And a lot of people were not happy with that. At the same time, look, you have to understand what the win rate is. This is just 2023, my friends. You have to understand that you're expecting 7 out of 10 trades to end on average overall at a loss. I want to go back 3 years and see what that is. Same win percentage, right? Same win percentage. So look, now you could see, oh, I'd rather take that 1% loss and get out of the market and be out of the market. FNGD still waiting for a signal, but getting closer. I want to look at the NASDAQ with you all in just a moment. I'll come back to that. So TQQQ also with a beautiful exit out of the market, and we're looking at the inverse, potentially getting ready to now enter the market. Finally, TQQQ putting in some green for the year in 2023. Bitcoin on the 8-hour remains solid out of the market in a massive position in power. Don't forget, we're still looking at momentum being to the upside, but now that it's flattening out, that momentum is also. You could see that we are almost just as close now between entering on the long side or on the short side, right? Because you could see that momentum, and I could zoom out a little bit and I could say, well, that's up and to the right. But that's waning now, and now we are looking at that uptrend actually becoming in jeopardy. It could go either way. We are not only neutrally positioned, we are now neutral as far as what our next trade would be. And it's the same thing on, no, Ethereum is still, and notice the difference. You could see that Bitcoin is actually, let me put them side by side so you could see them. I'm going to come to the same amount of time over here from March, right? And you can see that Ethereum is a little bit more flat in that uptrend, right? And much closer to the long side than the short side. And Bitcoin is actually beginning to roll over. Maybe that's why, Michelle, that you said that we were looking at the cross Ethereum Bitcoin getting potentially ready to trigger to the upside. So we'll come back to that in 1 second. Cardano is also here, has a current short trade, back active, looking to attack that weakness on the downside. On the daily time frame, we are looking here, by the way, Ethereum did what it's supposed to do. It's just take the trades that aren't going anywhere and let go of them as price was rising yesterday. Obviously wish it would have held that position, but looking to here enter the market again on the short side. And same thing with Bitcoin. So I said there's a lot going on today, and that's Ethereum and Bitcoin on the daily, looking for a potential another short position. And why on the 8-hour we could say that, well, you know, up and to the right, this is a higher time frame. And that higher time frame is clearly in a downtrend with just a little bit move up. If we're seeing resumption back down, we're now ready to take a poke at the downside. Both sides without bias. And by the way, if you're just trading on the buy side is more than enough to get it done, right? Take away the short side. Look at what happened. You're just out of the market, out of the market, out of the market. Buy, small loss, 4% loss, out of the market, preserving precious purchasing power It's much better than dollar cost averaging. Dollar cost average into your account each week, but not into Bitcoin until it's time to go long Bitcoin, and then you can put up those massive gains, protecting that purchasing power as opposed to letting it dwindle and go. That's people talk about dollar cost averaging all the time. I think it's a very weak solution. It really takes for granted that price is going to make new all-time highs and continue up and to the right. Look, you just don't know. And you can't really, especially a lot of people are putting all their eggs into that one basket. You got to be a little bit smarter about that. That's my own opinion. What are my thoughts on Apple, Metaverse, Sandbox, Coin Mania? I don't know anything about it. I personally think that if you're looking to take risks in the market, for example, if you were looking to invest in any type of meme coin, that's really like, you're really not risk adverse. You're willing to take on massive risk. I think a much better way to do that is doing that with like Ethereum, lightly leveraged. And when I say lightly leveraged, I'm talking about something like, I don't know, two and a half times leverage. I think that's really high personally. And you can see that the drawdown over here, this is going back 3 years, would be something like 32%. What happens if we come back further? What happens if we go to 2017 and you can see that 50% drawdown? That's a massive drawdown, right? Now, I know that people that jumped into Pepe, right, and whatever the latest flavor, like they're used to those type of drawdowns, as well as people who hold Bitcoin and Ethereum, right? They are, forget all coins. They're used to much greater drawdowns than this, but that drawdown for our intents and purposes is way out of line, right? Because without any leverage, you could see the drawdown that our expectations of what's happened in the past is significantly different. Like that's a very acceptable drawdown. And that's an amazing return. Now you add in that leverage, that 2.5 times leverage, and yeah, that's it's just unbelievable. Like, is it worth taking that risk? What happens over the last like 2 years of price? Take out the 2000 well, let me take out actually the bull phase of this. This is where Ethereum peaked in 2021. So this is not like any type of good price action to play with, right? The bull market of 2021 ended right over here. So we're starting in this area, and there's nothing special at all about this price action. That seems to me, for someone who's willing to take on the risks of meme coins, a much smarter way to go about it. I believe that. Now, if that's adding massive risk, I don't think it's necessary. I'd rather not have the potential of having a 50% drawdown or more or greater, right? Easily could be greater. I'd rather take the slow way out and just give it more time and deal with the smaller type of potential drawdowns, because these returns for that same period, again, nothing special about the price action of the last 2 years. One could even argue that, well, it hasn't been good at all. Volatility is down to historic levels. We're not in the portion of the cycle where we see any type of significant upside gains. And this is setting yourself up for a lot smarter calculated returns, in my opinion. Those are my opinions. Now, I wanted to take a look at what's going on here with the NASDAQ. And we've been watching. It's pretty cool. These light lines that I have over here. You can see this one line, this light line over here, the light line over here, right? The light line over here. And it's pretty neat. That's where price did come in. That we talked about that before price broke out above the resistance. We said likely that's where it would find resistance. That's where it found resistance, and now it's having trouble holding up above there. And these things often are not just like one and done. It is quite possible we see price get back above this line and close above it. And if it does, this repair, which is currently right now in jeopardy, right? 1 repair, 2 repair, the third repair. It's currently in jeopardy, but you have to be ready to flip back and forth both ways. All right. Now, the thing to watch on this chart is this line over here. This is a sell impulse line. If that were to see price close below it, then we're looking at what has been repairs across the NASDAQ turning into breakdowns. And then we'll have to stay in front of that and look for potential areas where we could be moving into. I just want to invert this chart for 1 second because at this is when I was sharing on Twitter, this line over here with this purple line. And the amount of people who were so bullish on the market at that point was overwhelming, which is why I inverted it to show, listen, are you bearish or bullish? And everyone was able, I'm bearish. Oh, that's the NASDAQ inverted. Oh, I didn't realize that. And now we're looking at a point in time where a lot of people, maybe rightfully so, are very bullish, but I'm not. I'm very, very cautious. If we break down below this line, I am looking at a massive, and we looked at it before, this is a rising wedge, right? I'll pull it up if we're breaking down. I don't have it here today, but this is a rising wedge in a downtrend that could be setting up some significant downside. So we're always looking to watch out for where we're wrong and what our downside risk is. S&P 500, you've probably seen it a lot too now as everyone flip bullish towards the top into the resistance. This is the line we've always had on the chart. On a daily basis, I guess we closed above there. But, same analysis. I'm going to move this line up just to show you where that's coming into the market right now. Maybe. I don't think so, but maybe. You could see that area of support. I could see it then forming support barely over here. And then the one touch over there. I'm going to give it plenty of room. I'm going to keep it down over here off the lows. We'll be watching that. Same thing for the NASDAQ. Let me come back and just add this line up with you. Let me do this on the 8 hours so I get a few more touches. And just to have a look, just to see. See, on the NASDAQ, this line actually makes more sense for me. I could see the support, then a resistance, support. All wicks below, support, support, support. That might be like an early warning sign that we were breaking down. And then I'm going to move it up over to here where we are right now. And I'm just focused in on where the market right now is also finding that line. I think we want to hold today. If we don't hold today, we could be looking at, obviously, I sound like a Captain Obvious, further downside, but this is the line. The outer line is where we actually have the sell impulse. So if we lose that line that we were just looking at, that might be setting up a move to test that line. We have Michelle's bull market, bull flag, right? We have the confluence of support in that area. We need to see that's a place for bulls to really, really hold the line. We have NVIDIA earnings after the bell today. And we'll see if that is able to counteract the potential debt ceiling debacle and also the global liquidity conditions, which are tightening. So we'll see if NVIDIA could single-handedly hold up the market today. And it could. I've seen crazier things happen. So we'll find out. We continue to see the dollar putting pressure on the market. And we were ahead of that at the right time, looking for that wedge breakout. And that's just staying on the right side of the market. And that's why we do what we do here and put the work in so we could stay on the right side. Yields coming towards the potential top end of the channel here. That would be, expectations are from myself, that's where we top out if we're able to get up there. If we broke out of that we'll have to follow the technicals and watch what's happening. That's all I could say. I want to get to Ethereum, Bitcoin before we do. Let's just check in quickly on oil. And I'm just going to move our trend line down further. And you can see right here, that's currently in play, right? Interesting. You can see the resistance there. Resistance, resistance. We'll continue to watch over that. We'll go back and flip back and forth. Ethereum, Bitcoin. Let me zoom out. This is okay. This is not what I'm looking for. So I'm going to just bear with me. But this is probably even a better angle. And why I say probably even better. Let me just go to a higher time frame to see where that's coming from. So that red line over there, that's a pretty special and important line. That's where I was wrong. I should have said breaking out above there is likely alt season behavior, but that's not what I said. Let's go ahead and take a look at it from a different vantage point. And let me jump over and look at, I think where I have the lines, Ethereum, Bitcoin. Let me go ahead and jump over here. I think it's on this chart. There we go. And you could see that we are getting close right now to, well, we're running into resistance. So, which is kind of neat because this line over here, we were looking at it like, I don't remember exactly, but if you hear, you know what I'm talking about. I had one line here and then I had another line, I think over here. And maybe it was over here. I'm not exactly sure. And as we were coming over to here and everyone was like aggressively Bitcoin dominance, we're like, well, we're coming into support. So there's not much difference now, only the adverse. We're coming into resistance. So this is likely where Bitcoin dominance will resurge unless we break out above here. If we break out and clear that level, at that point, we could be seeing, for whatever reason it may be, but obviously that volatility headed towards in Ethereum's direction. I don't know. That's kind of weak, but this is the best I could do. All right, everyone. Weak or not, thanks for being here. And thanks for putting the work in and staying on the right side, because that's what it requires is work. It requires constantly working on yourself, realizing, being self-aware, working on your greatest weaknesses, fine-tuning your strengths, putting it all together. Thanks for being here, everyone. I hope you enjoyed this session. And if you did, and you watched this on the replay, leave me a comment. I'm going to respond to it. Have a beautiful day, everyone. God bless you, and I'll see you all tomorrow.